Hi, everybody. So I'm Dek Alberi, Vice President of Payment Strategy for DailyPay. I'm basically managing the payments ecosystem for DailyPay, helping to actually deliver a product. What DailyPay is doing is we basically provide access to early wage access to employees. So when they basically work, they can get access to their earned wages as early as possible. The moment they work, we provide them the ability, and together with a great partnership we have today with TabaPay and Visa, we are able to deliver them the funds they already earned in real time where they need it.
Hi, everyone. My name is Jaspreet Singh. I'm a Senior Director at Visa Direct. I lead the commercialization strategy for fintech use cases in North America. As I said, I belong to the Visa Direct organization, and I don't know how many people are aware of Visa Direct here. But Visa Direct is a real-time money movement platform that enables individuals, businesses, and governments to send and receive money across the globe. So happy to be here, Tim.
Yeah, hi, my name is Tim Astanov. I work for TabaPay, which is full stack acquiring processing engine ultimately, or a platform, and I run commercialization similar to Jaspreet, which means from marketing to product marketing, go to market, and a bunch of other things. Thanks for having me.
Nice to have you all here. So Dekel, I'm going to start with you. Based on my understanding, you've been with DailyPay since almost day one. Can you tell us what the team was focused on when you were building your payment strategy?
Yeah, so DailyPay is a leading technology platform to provide access to earned wages. The focus, basically our mantra is to provide early wage access to everyone, everywhere. That means that our focus is basically reachability, availability, and reliability. What does it mean? Availability is we want to be available to all employees everywhere. Any employees that need access to their earned wages, we're trying to get as wide as we can to all of them. That's pretty common. Everybody wants to do that. About reachability, we're trying to reach everywhere they need to be. So it's great if I can give them a wallet or somewhere to put the money, but they actually need their earned wages. They need access when they need to pay gas, when they have a chemotherapy or whatever you can think about. We have a lot of employees, our users, basically testimony that they were stuck with no money in their bank, and what they need is access on real time. Right now they need money and not wait in this 2-week cycle, 3-week cycle until they get paid. We can access actually what they already earned, and we can give them a availability immediately. And we need to be where they are. And what we know is people use, we all know, use their debit cards to spend the money. And this is what we are allowed to do. So this is reachability. And for us, in payment strategy, when we think about it, is we need to do it all in the most reliable way. So basically there, we're trying to build a wide fan of availability, so we basically can actually deliver our service any point in time, even if something goes wrong in the system, and we're able to provide our services at all times.
Okay, and Tim, TabaPay works with DailyPay in order to do this, right? Tell us more about how you create connections to multiple network and how it works and what you guys do.
Sure. Reliability, I think that's what you're trying to solve for in many ways. So our TabaPay was brought up, so to speak, with the mission in mind of making instant payment simple and reliable. How we help DailyPay and others and their customers ultimately is as by virtue of connecting to every network, and every network, regardless of the form factor, whether it's a card or bank account. Our job is to make sure that the funds are going from DailyPay's account ultimately to the consumer's account at whatever speed they prefer. If they want it real time, it's going to be real time. If it's not, it's going to be slower. But in order for us, because they're responsible of delivering funds to a consumer who is very time sensitive, right? It could be, regardless of circumstances, a consumer need to have money right now. We all have technology players in one way or another. And part of the challenge is, as a technology players, there could be a system down, one system down, or some other system down. So we try to connect to every possible network, at least in the United States, to ensure that if one network is down, there's always another path to deliver the funds to an account.
So would you say the main benefit is reliability?
I think it's one of them.
Okay.
It's,
what are the others?
The reliability is absolutely one. The second is it's a question of what are your other options. If we're talking about, as a topic of the I guess the forum itself, build versus partner. If you think about building one, the challenge is, do you want to spend resources and time on building as many connections, provided reliability is important to you? Because there are plenty of ways to deliver money. You could connect to a single network and deliver money to cover a majority of the accounts. But that network might be down one day, and will customers forgive you if you're down for a couple of hours? It could be one of those events that you're going to be out of business post that.
That will be when I call you.
That will be when you call me. Well, the good news is I have a few networks to route through. But so one is simplicity, right? So in order for somebody to build a network, let's say, or to build a connection to a network, that generally networks don't just sit around. They constantly invest into their own infrastructure, which means that they, at some point, they'll come to you every 6 months, typically. You're required to do some sort of upgrades. If you build a network, a lot of people, if you build a connection to a network, a lot of folks thinking, once I build it, from that point on, it just, I put cards on the rails and those cards are moving back and forth. The reality is there's a whole lot more to it. They innovate, they create new value-add services that helps authentication or something else. And ultimately, that means you have a constant expense of running stuff, investing in R&D to keep up with their innovation cycle, and many other things. Again, if you compare it to build versus partner.
Okay, and Visa is one of these connections.
Absolutely.
So, Jaspreet, tell me where Visa Direct fits in and how it's used.
Well, I think just to give you a little bit of history about payments and Visa Direct, how it came about. Traditionally in the U.S., ACH has been the mode of payment where everybody moves money. But there are, just because of how ACH is set up, there are some inherent inefficiencies. It's not 24/7. You cannot do, you cannot do payments on holidays or weekends. So when Visa Direct was conceived, one of the ideas was how we change that and how we address those inefficiencies and do more than that. So Visa Direct is a platform that enables all of this to happen. And how Visa Direct fits into this scheme is Visa Direct runs on the VisaNet platform. So you see POS transactions happening at a merchant location. They go through the Visa network. The Visa Direct is also has the core of Visa Direct is also VisaNet. So these money movement transactions are also running on the same platform. So as far as the ecosystem is concerned, Visa Direct plays the same part as Visa Network does, in a typical POS transaction. We work with merchants, we work with acquirers, acquirer processors, and the issuers on the other side. But our core role is to connect the origination of a transaction with the receiving side, which is the issuance. So we work with the issuer processors on the issuing side, and we work with the acquirer processors on the acquiring side.
Okay, and when does it make sense for people, for fintechs to build directly?
Yeah, so that's an interesting question, and it's something that always comes up in all of our conversations. So I focus, as a part of my job, I work extensively with fintechs, and this is one of the questions that always comes up. Can I directly connect to Visa Direct instead of going through other processors? The answer to this question is, you have to assess your own business situation, correct? So there are three main questions you should be looking at. How do you have any experience with payments prior? Do you have enough resources? to manage a payment network or payment processing. You have and you have the scale and the wherewithal to do that. And lastly, what is your how do you feel about the speed to market? All of these considerations are important as you're making that build versus buy decision. It's not as simple as connecting to a bunch of APIs and then you're done. Deckel can attest to that. So there's a whole lot that goes on behind payments processing. It's a complex area. And if you don't have experience with payments, then better leave it to the experts until you gain that experience. So building that business case is essential. Initially, sometimes, the fintechs also think like, okay, maybe we should not have these many middlemen and the cost could go down. But soon you realize that, there's a lot of abstraction that happens when a payment processor comes into play, because they do a whole lot for the merchant than just passing on the messages. There is exception processing. There is mandates that that the networks issue, that processors always have to comply with. So all of those things, if the merchant were to take on themselves, then it requires a whole lot of resource commitment and effort. So our advice to the fintechs and the merchants when we talk to them is always, walk before you run. Depending on which stage you are at in your business, you have to assess that. And if you are in early stage, maybe this is not the stuff that you should focus on. You should focus on your core, develop that business, and then, when you reach that scale, it's, then try out the payments side of things yourself. So it's kind of a nuanced answer. It depends, on the type of fintech, but then also, fintechs need to understand that the processors are there for a reason and have been there for a reason because of the value they bring in terms of, services they offer.
Yeah, no, that makes sense.
If I may add,
Yeah.
I think one thing that you didn't mention, just and simply because you're looking from a network perspective. In the United States today, you cannot connect to a network without having a bank sponsor or a partner. At least in the US, that's the current dynamic. And the reality is, even the network, let's say, might say, yes, that's fine, you hit all the criteria, we very much align with your strategy, you should connect directly. The next question will be, which bank would you partner with? And then you have to have a conversation with the bank, and many banks will say, we have no interest because we already have 15 different connections, and if you want me to, meaning the two different processors, if you want me to sponsor you, you probably should talk to one of my processors, because that means a whole lot of work for me to support you as well.
Okay, so it's way more complicated.
It's more complicated than just network.
Okay. You mentioned it, Jaspreet, the cost angle. I think that's probably quite top of mind at the moment. Build or partner, what makes more sense from a cost perspective, would you say?
I think as I mentioned, if you just look at the cost of processing, different processors have their own economic models and costs that they apply. So it's hard to answer, okay, which processor and how do you do it? But even if you were to look at it from a very simplistic fashion, there are transactions that flow on the platform for which there is a cost which you have to pay to the network. Then there is a whole lot of value-added services, correct? There is, as I said, exception management work that you have to do. You have to commit resources. You have to commit full-time employees to that. So there's a cost to that. Then, think about, the services that you will have to manage in terms of fraud mitigation. So as Tim mentioned, Visa as a network, we come up with a bunch of tools and services that are at your disposal to use. But you will have to commit technology resources to do that. And if you were to use a processor, in that scenario, most of the time, the processors would already have connected into a network and have those services ready for you. So then again, it becomes a analysis that needs to be done, like how much you are saving versus how much you are committing. Ultimately, most of the time you will realize it makes more sense for you to focus on your core business and use a processor for having all those benefits rather than doing it yourself. So to answer your question, I think we see both types of fintechs. There are fintechs who have evolved in their business and would want to rather do things directly with us. But large majority of fintechs and players, they still connect through a processor for all other reasons.
Okay, and how does scale factor into this? When does it make more sense for them to bypass the processor and just do it themselves because they're big enough? Dekel, I want to direct this question to you initially. Tell me about why you chose to maintain a connection.
Yeah, so it's a good, thank you for the connection here. It's like, I think it's very interesting because like DailyPay is probably arguably pretty large and able to do it ourselves. And some will claim that it is actually might be smarter for us to connect directly to the network, bypass any middleman and everything. But part of the things that kind of maybe the language was missing here is like kind of what people forget is operating expense. Eventually for a business, running the business and everything, it's not just what you look at the transaction cost. Many people look at this as like, oh, let me get a quote from this, oh, Visa, this number, and that processor, we call it enabler for TabaPay. I said enabling me to access the network, and yes, there is some overhead there. Yes, someone need to pay team, which is fine. But for me, if I look at it in kind of what Jan-Smith was explaining, if I do it any other way, I will need to spend a lot of the time and effort, resources to put on actually managing it. And that will be maybe not in the per transaction cost that we look on the a la carte, but it will be basically for me running it. DailyPay is in the business of partnering with the largest and the most known brands in the US, employers like Target, Hilton, and Kroger. And what we do best is to focus on that and delivering our service. Eventually, what we're trying to create here is a service that's built on an ecosystem that can actually solve people's real problem. If people don't need to be paid, there's no reason for Visa to be in business, no TabaPay, and no DailyPay. What we do best is actually accessing the employers, accessing the consumers. We're able to get those to basically to start using our service and give and improve real people's real life problems. This is what the core business, this is what we do best. And we focus on that. And just like I don't go and build my own cloud platform when I want to build my IT infrastructure, I don't need to focus on building the payment infrastructure. So basically for me, I go to enabler like TabaPay to help me, and I create a one connection to TabaPay. And yes, I do have some other in parallel because we need reliability, but I let them manage and do their business. Their core business is actually connecting to the different networks and doing a lot of the heavy lifting on that side, while DailyPay can focus on delivering our core business and our promise to the customer.
Just to add one more thing on that, on stuff that Tim mentioned earlier around acquiring banks, and then to what Dekel just mentioned, think about how if your services are going to evolve, if you, let's say you start off with a domestic business and you want to go cross-border, now the complexity even, grows many folds. So now if you were to connect with a processor, typically a processor would bring an acquiring bank who already does that. They would also have, in many cases, an ability to process those cross-border transactions as well. Think about new products like Visa Plus. That's a new product that has been launched recently. So getting access to those products and services becomes much more easier if you were to use a reliable processor for those things, because typically a processor would like to stay up to date with all those services and have those handy. In the same way, Visa Direct also, not just for cards, Visa Direct also offers services where you can reach out to accounts and wallets. Now, if you were to do directly, integration with Visa, you'll have to think about all those endpoints. How do you connect to those? What other integrations that you need? Typically, a processor would like to make those available to you more simply, either one or two APIs. Most likely, it's just one API connection. So all the things that you need to consider based on your roadmap, where you want to go, where you are, and where you want to go, and how you want to evolve.
Tim, would you like to add to that?
I think I completely agree with that statement. And I think in the case of fintechs, it's substantially more complex than, let's say, a traditional merchant. When we say acquiring processors, people think about, I have a t-shirt shop, and all I need to do is accept cards. There are plenty of processors in the United States and other countries that can do it really well. Because we're in a fintech conference, and I think, Declan, you would argue, many of here in the audience as well as us on the panel, we're all fintechs. And what it means is that the needs is substantially greater than just the typical sale of a t-shirt or acceptance of a card. We've seen many times over and over where a customer or client would come in, Declan would agree with that too, and say, I need a particular function. Let's say I want to accept cards only. Then that's a start. Then they're starting to say, well, can somebody pay me by account? Well, it's a completely different network, different rules, different process in general. Then they want to say, can we pay supplier? Or can we allow our suppliers to withdraw money from the wallet or our consumers? Then they're saying, can we lend them and disperse a loan, and then can we collect a loan? Every single nuance, every single transaction, it's very specific transactions. Some are supported by multiple networks, some are supported by one network. And when you're building your own, when you're considering building your own infrastructure, you should also start thinking about what am I going to be 5 years from now or 10 years from now? Because once you invested money in building a single connection to support a single activity, it's very hard then to go to management, or I don't know, if you're a C-level yourself today, or revert based on your decision saying this was a bad call, I need to go to somebody else. And so TabaPay specializes in fintechs. Our job is money movement. We're not in the business of supporting t-shirt sales. We understand it, we see it, and it's like going to, I think my boss tend to say, do you want to go to a general practitioner when you have a wound that you need to treat? Probably you want to go to the surgeon. So find yourself a partner who can actually serve you well with the insight or with the mind that you're going to expand your services. It's just a matter of time. So yeah, I absolutely agree with Jaspreet. I think the diversity of use cases, support of diverse use case base is very important.
Yeah, and I like to expand this as well. Kind of, I think the Visa Plus is a great example. Visa is in the business of payments and building payments products. They went on their mission and built Visa Plus, a new network, brand network, creating interoperability between wallets and new payment method that simplify and solve a lot of the problems in the payment world. However, they need someone to actually start and working with it and connecting to it. I'm happy to partner with TabaPay that will be doing the hard work in actually doing the connection to Visa and doing the work in actually creating that infrastructure to give me eventually a simple API that for very little effort on my end, I can put it on my app and keep focusing on what we do best. Our focus is to get customers, whatever they want to buy, if it's shirts or whatever they want to do. We're trying to focus on that and grow our business. Our business is growing 66% in employers, new employers in the last 12 months, 66% more employers, clients, and nearly doubled in consumer by users. This is what we focus, and we can focus on that while TabaPay is focused on actually implementing and building new capabilities, connecting to rails and networks, and Visa is focusing on building Visa Plus and payment services.
I'd like to take this kind of to a wider perspective. In the current kind of environment, does it make more sense to partner? Less sense? More sense? What's your take?
In the current economic environment?
Yes, exactly.
I guess it's a question of how much cash you have on your balance sheet. And again, I think it all comes down to strategy. I don't know if it's best. Economic conditions probably drive some of the decision making at at the company who is contemplating to build versus partner. I think current economic environments today specifically, the banking decision is going to be much harder to make because they're much more cautious, especially with fintechs. I don't know if the economic conditions other than the banking side, at least today, will influence your decision to build versus partner. It all comes down to the overall strategy, and do you want to be all vertically integrated, or do you want to focus on your core business and outsource something to a third party? But there is obviously cost associated with it, variable cost potentially increased. But again, at the same time, you're looking from a business continuity perspective. I would argue you should always partner with a processor.
I would actually make a stronger stand that it's, with the current environment, it's actually making more sense to partner because if I would want to partner directly with Visa and integrate with them, it will take quite a long time. I will do it. Eventually it will work, and many people did, and TabaPay did, and everyone. However, I would claim, one, it's probably much easier and simpler for me to integrate with like a unified and easier interface like TabaPay and other enablers to be able to access to more networks in a much easier way and much faster speed to market. It's again allow me to focus what I do while they focus what they do. With today's environment, cash is not there. The regulatory requirements are much higher, and the bars keep increasing. And it makes your life much simpler when you can offboard a lot of the work to other partners that can actually do it better and faster and focus on doing it once, providing an easier interface to me.
No, I agree with both of them, actually. So again, in current economic environment, if you're cash strapped or you want to be cautious, would you want to commit more resources now upfront, or you would want to, make sure your business continues to happen while the economic environment settles down, and then you make a decision about committing resources? I would think it's the former than the latter. And then also to just a little bit more hone on what Tekel mentioned about connecting into network directly. So it's not as easy, correct? Like it's not like you just you can walk to a network and say I want to connect and you will be done, correct? There are a lot of processes and steps that need to happen before you even get to that technical integration step, which includes a lot of risk assessment and evaluation, sharing of information, which itself takes time. So in this environment, I would assume fintechs would, as they always do, would even more want to take their products to market sooner to the customers, so that they can capture whatever revenue streams that they want to. So it's imperative for them to focus on their core business in doing that. So I would say that I think it's even more relevant for them to look for partners as they start their journey in this payment space, as opposed to trying to do it directly, because then speed to market will be a factor as well.
Okay, so partnerships are great. What do you find is the biggest challenge, and how do you advise fintechs to kind of navigate that challenge to partnering, I would say? Any of you, all of you?
I think it's very important to find the right partner. DailyPay partnered with a few in each and every point that we need to do, any integrations we need to do, if it's on the payment rails ecosystem or any other integration that we do with ACM and whatever. We partner with as many as we can when it's about reach, but with the best that we can find when it's about creating the reachability to get to the user and to the consumer. And I think finding the right partner is very important. Sometimes it relies on some, I want to use the word synergy, but it's often used in different contexts, so it's kind of finding the way that you can find that it will be a partnership that actually both sides win, not just like the zero-sum game of getting like a transaction cost or whatever, but is like building and improving the system. I believe, nobody will confirm, but like, yeah, Visa like to work with DailyPay because we're partnering and we're with them on to try and to experiment new ways and new business and new models to use the system, how to increase the reach and availability of the system. And I think it's the same between DailyPay and TabaPay, that we are actually working with them and we're helping each other to work and actually improve how we actually deliver our services. It's critical and can change the life and the trajectory of a business, I believe, if you do it right. If you find the right partners, you do the right partnerships, and you maintain a good partnership, I think you can actually find that the impact and ability to deliver your core business improve a lot by order of magnitude.
Yeah, and I think right is the key word here. Okay, what is right for you is to be defined by you. If you want to focus on one specific use case, then there would be enablers and partners who are specialized in that. And if you want to be more broad and keep your options open in terms of where you want to go in future as far as your platform strategy is concerned, then you will have to evaluate the processors accordingly. So you have to look at the processors who can do the most. An example would be, okay, there are processors who only do domestic. There are processors who do domestic and cross-border. And then within the cross-border piece, they have multiple endpoints they can reach out to. How well they are connected into the networks is something that you should assess. And last but not the least, the value-added services that the processors provide. You know, how integrated they are with the network value-added services, what do they bring to the table on their own, are some of the considerations that you should always keep in mind as you think about, you know, partnering with the processors so that you can get the best results, and best results for a longer term, not just for the shorter period of time.
Okay, I'm going to take this to audience questions. If you want to add any questions, you just need to use the QR code. So we're going to go with this one. How long will it take to integrate with Visa?
Well, as I said, like integration, define integration, you know, there are steps before integration and there is technical integration. So, you know, it depends, you know, how fast all the how fast the information exchange happens. So it could be anywhere from 6 months to 8 months, provided that you can pass through all those assessments and you are approved to connect. And then when you connect to Visa, then there is another consideration you have to also make. Is it just connecting into Visa so that you can reach out to Visa cards, or you'd want to reach out to other networks also? Because most likely you would want to do everything with Visa, which will mean that you will have to also connect to the Visa gateway service that opens up other channels for other networks, cards to be accepted through the same connection into Visa, which may add some more time because that would also require some assessment. So typically speaking, anywhere from 6 to 8 months is everything goes well.
But what you're referring to is for Visa Direct specifically, which is a subset of functionality within Visa.
Yes.
You're also referring to technical integration and
yes.
Certifications. What you're not covering is the rest of the question. And the rest of the questions, it's back to the banking side, right? Because it's actually, you don't, from a regulatory perspective and et cetera, the rest of the questions are actually covered by the bank, because Visa does not do business with a fintech. Visa does business with a bank, ultimately. And a bank takes all regulatory responsibility and accountability on your behalf. And that's where it becomes challenging. I mean, I've seen 2 years. I think I've seen less. It's a question of priority. And I think we should start probably, every network has 15 ways to connect to them. And it's a question of what activity you want to support or what you want to get from a network. Then you have to decide which connection you want to support. Then they will offer to you ISO, maybe something fancier than ISO. The fancier it gets, the harder the work.
Yeah, so integration means you are signing up for being a full processor, correct? So which means that the relationships, the banking relationships, the acquiring banking relationships that you are going to establish, that's up to you to establish. It's not coming through Visa. It's going to be you setting up. So yes, you're right. I was just talking about integrating into Visa, what it takes to become a Visa endpoint, as opposed to the other things that you have to take care if you choose to become a processor, self-processor. Thanks, Brad.
Yeah, we've been, just for instance, we've been in the business, we've been endpoint for Visa for 6 years. And I think we probably consume, if I ballpark it, less than 30% of all products that's available in Visa. Visa has over 170 products, and it doesn't stop.
So I would add here, I'm probably the least qualified to answer the question because I did not choose to connect to Visa Direct. And to be honest, I am grateful for making that decision, and I believe DailyPay is grateful for we showed that path. Slightly on a lighter note, I would say the straight answer, plain answer, is going to be forever. It's going to take you to integrate. And because of all the different aspects that you need to to fulfill, the numbers that I hear around, and when we did the research, it's about 9 months. It kind of fits, to build. But the truth is, you build that and you have connectivity to Visa. What about other networks? What about other rails? What about the other payment methods, and what? What about the next product, and what about the next payment method? And there's so much to build. There's so much to handle. And if this is your specialty, to process payments and to enable access to Visa, go ahead, compete with TabaPay. If you want to build payment systems, go ahead and compete with Visa. If you want to just use those services and build something else, come to my world and use enablers.
Okay, does anyone else have any questions? No? Cool. Okay, so I guess that's a wrap. We've got 1 minute left, so thank you very much for taking the time to be here, and you guys as well, and have a great rest of your event.
Thanks a lot.
Thank you.
Thank you.